Hey there, everyone! Welcome back to the channel name. If you're a student or planning to go to college, chances are you've heard about student loans. But have you ever wondered how student loan interest actually works? Well, you're in the right place. Today, we're going to break it down in a simple, easy-to-understand way. So grab a notebook, because this is information you won't want to miss. Have you ever thought about why student loans can feel so overwhelming? Is it just the amount borrowed, or is it the interest that adds to the confusion? Let's dive into that and find out how student loan interest really works. First things first, what exactly is student loan interest? Simply put, interest is the cost of borrowing money. When you take out a student loan, you're borrowing money to pay for your education, and just like any loan, you'll need to pay back that money plus some additional fees, the interest. There are two main types of interest rates for student loans, fixed and variable. Fixed interest rates, this means your interest rate stays the same throughout the life of the loan. For example, if you take out a federal student loan with a fixed rate of 4.5%, that rate will not change. You'll always know exactly how much interest you'll be paying. Variable interest rates, these can change over time, usually based on market conditions. If you have a variable rate loan, your rate might start lower than a fixed rate, but it can increase, making your payments less predictable. Now, let's talk about how interest is calculated. For most student loans, interest is calculated using simple interest. This means that the interest is calculated based on the principal amount, the original amount you borrowed. For example, let's say you take out a loan of $10,000 at an interest rate of 5%. If your loan has a 10-year repayment term, you'll be paying more than just the $10,000 you borrowed. The formula to calculate interest is pretty straightforward. Interest equals principal x rate x time. So, in our case, principal equals $10,000, rate equals 5% or 0.05, time equals 10 years. This means you'll pay about $5,000 in interest over the life of the loan, bringing your total repayment amount to $15,000. That's a crucial number to remember when budgeting for your future. Another key point to understand is how often the interest accrues. This is known as capitalization. For most student loans, interest starts accruing as soon as you take out the loan. However, it's essential to know that with federal student loans, you won't have to pay interest while you're in school as long as you're enrolled at least half-time. This is what we call our deferment period. But once you graduate or drop below half-time, interest will start adding up. So, what about different types of student loans? Let's break it down. Federal student loans, these usually have lower interest rates and more flexible repayment options. They also offer benefits like income-driven repayment plans and loan forgiveness programs. Private student loans, these can have variable interest rates and may depend on your credit score. They might be higher than federal loan rates, and they generally don't offer the same protections, so it's vital to read the fine print before signing up. Here's a quick example. Imagine you have two loans, one federal and one private. The federal loan has a fixed interest rate of 4.5% while the private loan has a variable rate starting at 6.5%. If you have to choose, it's often better to stick with federal loans because of their lower rates and added benefits. Now let's touch on a common question: can you pay off your student loans early? The short answer is yes. Many loans allow for early repayment without penalties. This can save you money in the long run since you'll be paying less interest overall. Just make sure to check with your lender for any specific terms related to early repayment. In summary, understanding how student loan interest works is crucial if you want to manage your loans wisely. Remember the difference between fixed and variable rates, how interest is calculated, and the importance of knowing when your interest starts accruing. If you found this video helpful, please give it a thumbs up, subscribe to our channel name for more educational content, and share it with your friends who might be navigating the world of student loans. Do you have any questions or topics you want us to cover next? Leave a comment down below. Thanks for watching, and until next time, stay informed and keep striving for your educational goals.